Good morning, everybody. Hope you had a great evening. It was another nice one here in Wichita. Temperature right around 80. We're supposed to be in the high 80s on Friday and Saturday before cooling back down to the high 70s. So you couldn't even call us Indian summer. We've had maybe 3 or 4 days of the blast out of the north so far this fall. So came really early and it's disappeared since then. A lot of moisture came across the state of Kansas, except around Wichita. Went north and south of us. So Oklahoma got good rains last. So did the northern 2/3 of the southern 1/3 missed it. So we still need moisture to lock in and get the hard red winter wheat crop going. And it's an important crop for the world because it's the stuff of bread. Soft wheat, soft or spring wheat is the stuff of cupcakes and muffins and the soft bakery goods. It can be substituted for bread when nations get really desperate, but most people like the hard red winter wheat to make bread with, given their choice. And it's a real important commodity for the Middle East, Africa, and it helps keep dictators in power. You can lose your country over that. Failure over the American crop. Okay, I think the biggest thing that's going to influence the trading the next 2 days is option expiration, and 127, 128 is where the players are lining up, so that would give us a close at 16. And you can see that we've got our famous saddle formation, and that typically leads to the market filling in volume in this area right here. So we should have a seller 16 to 20. And the buyer, I'm guessing that this 4 to 8 area is going to hold down here. So we're going to make our first buy 5 to 9, pretty aggressive. But because of option expiration and lack of news, I don't think the markets can do much today. 29 to 01 for buy 2. On the sell side, 15 to 19. And 23 to 27 where it was yesterday. Okay, today's news. Jobless claims, 285. Chicago Federal, the Chicago Fed's National Business Activity Index, nobody will pay any attention to that. FHFA, House Price Index, plus 0.3. PMI, manufacturing. This one actually could play a little. They're trying to establish a presence. They do get reactions in Europe. They're trying to bring it to the United States to be with the ISM Manufacturing Index at 57. LEI at 0.6%. Again, interest rates and utilities are a big part of that, so it's usually discounted pretty heavily. KC Fed at 6.0, and then natural gas inventories at 96. So jobless claims number 1, PMI flash number 2, and then LEI and FHFA at number 3. So we'll have the first piece of news at 8:30 Eastern, and then the rest pops in at 10 Eastern. So I see a trading range. Don't see a lot of activity on the sell side because of option expiration. They might run it down and test the buck. The 5 to 9 might be able to buy it at the low end of that when it's all said and done. The structure, it makes it easier. The 15 to 19 is an easier call than the buy. Okay, the knob spread's basically holding in at 15 plus, not really moving, up a couple, down a couple, depending on the day. It's come down from 16 this week. Next week we'll have the 2, 5, and 7-year paper. And usually the market is run down in front of that. So this 127 on the 10-year note, 127.16 probably is where we finish out. And on this market, the 142 area, 142.04 is pretty good support, and we'll have resistance in the 42.28, 143 area. On this particular contract, it's 42 to 44 is where the option and futures contracts lined up. So mathematically, that would make a close at 143. Split the difference. Okay, we had buyers below 04, so we'll make buy 1 to 5, and then 25 to 29. On the sell side, this 15 to 19 area looks pretty good. Again, it's going to be this saddle. The market needs to fill in volume in this area. So it starts at 16, and then 23 to 27 for sell 2. Overnight, the news out of Asia was really pretty quiet, not much there. Asia, as it usually does, follows the lead of the United States. It's sold out of the European Union. Spain's unemployment dropped to 23.7, which was a little better than forecast. France missed its PMI, its manufacturing and its services PMI numbers came in a little bit lower. Germany came in higher, so the EU's numbers came in higher based on the weighting of Germany's numbers. So Germany once again is carrying the load for the EU. In Great Britain, their retail sales and industrial orders expectations numbers came in less than forecast. So Britain's numbers were a little than forecast. So Germany had the best economic news overnight. Middle East is quiet. Nothing has really changed. Supposedly the United States is going to make sure that Kobani doesn't fall. That remains to be seen. Okay, we're at 35. We got this low right here at 33, and we have this low at 30. So maybe stops head a little lower. This 30, 32 area buy 1, and 25, 27 buy 2. I like the short side better, as you know. The last rotate up stopped at 38. The spill was from 36. We're at 35, so 38 to 40, sell 1, leaning against that single print, and 43, 45 for sell. The retail account are support the physical gold market. When India lifted their ban on buying gold, the demand for jewelry exploded in India. And then central bank buying. And the player that's missing from all of this is the large financial institutions. What's been interesting is that central banks have not been shy on selling gold futures to drive the price of the physical down. They can come in and throw $1 billion at the market in a very short period of time and knock the price of futures down and then buy the physical cheap. And if you and I were to do that, we would be put in jail. But so much of what governments do is outside of the law. And because they're ultimately in charge of enforcing the law, they don't put themselves in jail. And when you go around in the United States and look at the biggest sources of pollution, the Savannah nuclear facility in Savannah, just north and west of Savannah, Georgia, the big chemical nuclear facility outside of Denver, and then Hanford, Washington are the three biggest polluted spots in the United States, and it was polluted by the U.S. government, who is supposed to protect us all from that. So the irony is that the you really have a wolf in sheep's clothing in a lot of the government's activities. Okay, we got volume up here at 27.26. We've got volume right here at 7, and then a little down at 38. So we're rejecting prices really below 35. And on the upside up here, this 27.15 to 27.25 is where we are. So we kind of right in no man's. So 26.90 to 27, let it get stops above here would be sell 1, and 15 to 25, sell 2. On the buy side, 30 to 40, fairly aggressive. And again, I really don't like the long. The only long I really like in the euro is covering a short, and then letting them get stops below the overnight session low 26.10 provide too. I think this market's probably on hold until Monday, when we find out what the ECB actually bought and how much money they spent. And it'll probably hold our markets in check too, because the new market support is coming from the European Central Bank, not the Fed. You know, you read about the United States stepping up their bombing activity in support of the Kurds or this and that and taking on. They're flying less than 10 sorties a day. And they're flying them with airplanes that really can only make one pass and don't really loiter. So they get a target, they go in, they hit it, and they come out. And this is not a concentrated or focused military action against ISIS. It's a political game where they can point out that, yes, we're doing something about it. So we have started supplying small arms ammunition to the Kurds, although some of it falls into enemy's hands. We are upping the political rhetoric. We are doing our 5 to 10 sorties a day against them. So we're, you know, in a half-hearted response to what's going on. This market is really subject to very quick runs, just from short covering alone. We thought we were going back down to 80. We got closer to it. People that sold it in anticipation of going to 80 will now be, the biggest dynamic will be those people covering their shorts and taking profits. You can see volume, most recent in the markets, held market up here. So we've got an 81.75, 82 sell, and then 25 to 50. You have to use protective stops. We've had 2 days that have approached $4 in trading range for the day. The break is from 85 right here, so we'll make 75, 81, buy one. And the second one will be 25 to 50. Our talk about going back and retesting 80 has been, and it was met in the overnight market. And so for longer term position trades, if you're still, make sure you got a protective stop out there to protect some of your profit. Okay, to the S&P, which I think ultimately will give us the direction for several contracts today, especially the financials. It's off of its lows based on the news out of Europe. So we find ourselves pretty much where we were yesterday. I mean, resistance is at 40 to 40. The market is pointed higher, no doubt. Central banks would like it higher. So we've got resistance up here at 43, maybe stops above that, 44, 46, sell 1, and 49.50, sell 2. If we take out this 55 area up here, 68 and 78 are the two numbers that we'll be looking to. So this 55, 56 is a pretty important resistance or tipping point in my opinion. We're at 40 right now. They've made us pay up to get in. The last rotate down was stopped at 33, so 33.35, buy 1. And the breakout came from like 28, 29, buy 2 will be 29 to 31. I'm more comfortable. I think the easiest trade to see is failure to take out 43.50-ish. The 35 number is they make us pay up to get long early in this. And then the 29 to 31 is against last night's break. Today's news focus will be jobless claims at 285. Flash PMI at 57 and LEI and FA housing price index. Okay, it'll take about 15 minutes to get everything up and posted. If the E-mini can't take out that 43.50 area, then our sell's going to come in this 40 area, 40.42. But I think they're going to get stops above yesterday's highs. It's pointed higher. And this market, we're still dealing with a peak. We have structural buying. You can't ignore that. The market is pointed higher because of central bank intervention and outright support for the markets. Be back with you as soon as possible.